I wanted to do a trade breakdown to understand how I took this trade and why I had in mind what I had in mind. So basically, as you can see, price was consolidating. This area was obvious consolidation. I've marked it up, and it was obvious to me that taking buys inside of here is not a good idea. It's just fake. So in my opinion, and I'm saying it with you should grab this in your mind. In the small time frames, I never get confirmation to trade. I always trade only with confirmation of the high time frame, and it's supposed to be very basic to every trader, but I'm saying it again so we won't forget this. We're always getting confirmation from the higher time frames. So I had a previous trade that came to this area, which I actually took from from the bottom of the beginning of this movement, and it was very, very good with a lot of ticks inside of it. And I don't want to focus about him. I want to focus about this trade, and it had a lot of pips. I'll show you. So we had a really big, nice movement up and consolidation. Now, if you remember when I talked about consolidation in the past, consolidation means that it's a moment of indecision. And it's a moment that price goes up and down at the same place. I called it spiritual existence, right? Divine revelation in this area, because it contains both movement, up and down, up and down, up and down, yeah? So, because of that, a lot of people buy contracts in here. Some will put their stop losses here, and you can see price took out those stop losses, took out those stop losses, and so on and so forth. And from my experience, when price does that thing, and my objective is higher, again, I'm not just doing a trade because I think that's the way it is. I have some other confirmation, high time frame confirmation. So on the hourly chart, it is obvious to me that we are going up. That was very obvious to me. And as you will see, it was correct. The analysis was correct. Did I enter a trade just because it's going up? No. I had to wait for a confirmation, not on the high time frame, but an entry on low time frame. And that entry was possible at two areas. It was possible here, around here, because there is a fair value gap around here, as you can see. And there's a fair value gap around here. Both places was a possible entry. Now, I aimed for the first one here because sometimes when price does like some sort of a touch and run up, so it took the possibility for an entry here. So let's see what happened. First of all, it's very nice to notice that price seems as if it's going up. It did a very bullish movement. You can see that. Now, the first trick that untrained traders do is when they see this breakout, they buy. Are they correct? Yes, they do. Price is going to do a breakout, but it's a false breakout because it wants to do this turtle soup trade. But to me, it wasn't the entry area. I was setting my price here. So would I buy and run after the price? No. I sit and wait. And that's all the job of the trader, to be consistent with what he sees. Don't try to think, all right, I missed it. No. Price will take you out. You'll become liquidity because everyone who buys here, and this is a lot. These are a lot of pips, a lot of ticks. They will get out. So, price went up, and then it starts going down, and that's where traders get stuck. If you've seen that, I'm on a fast forward, so I'll show you something. Look at this. This is what I want to show you. In the middle of my trades, I always have confluence on the higher time frames. Now it's only 5-minute time frame, and it looks like something possible, but I'm just checking out if I'm correct with what I see, and I was correct. So I went back to the 1 minute and I waited a little bit longer, and guess what happened? Again, checking again if you can see what happened. Price came lower. So he took out everyone in here and their stop losses that they put here and grabbed their money. Now, price came here, touched exactly where I aimed for, all right? It touched exactly where I aimed for. And now I was waiting for a big push up, for a run. That's what I want to see, right? So I didn't really get it. There wasn't a really big push. So in that moment, I understood that this was a signaling of the price that we're going for this fair value gap. So I was looking to close in profit, not in loss. And you will see that very soon I will close this trade. It would go slightly up and then I closed it. Let's see. Yeah, you've seen it. I just closed it. I've seen the price is just faking me again. It was another fake. You see those big wicks. Those big wicks. Yes, it showed me that we're not aiming for that we're going still lower to this area. So I closed the trade and I waited again. And now another confirmation I took was an optimal trade entry, and this is something I should have checked before, because as you can see, price didn't reach. This is the 50%, which is we're still in premium, so it doesn't look that. It's more likely for price to go here exactly to the next fair value gap, which is on the 50% on the discount. That may take price higher. So that's exactly what I did. I've checked with Fibonacci, saying that we are not in discount yet. So I closed it. I'm waiting carefully. I'm waiting. Not entering yet. Price is giving more signals. I don't buy them. I don't believe him, because we're in premium. But now something interesting happened. If we're still in premium, but the real target is much, much higher, and we're starting to get bullish signals, then what we have said about premium, it means that we didn't reach a level which we can measure. So what I've done with the Fibonacci is not correct, right? So I'm looking at the bullish signals. First of all, I've seen a fair value gap created, which tells me bullish sign, right? I'm not buying it yet. Next thing, look at this. I dropped down to the 50-second. I'm not telling you should do it. You should all test by yourself and understand by yourself. But when I marked this 1 minute fair value gap around here, I noticed something interesting. There was a market structure shift. There was a reversal pattern, right? Price took less low, took less high here. As you can see, I've marked it. And exactly on the 1 minute fair value gap, there's a fair value gap. It's supposed to be a classic reversal pattern. So let's for a minute, I'll go to paint to make you understand what I'm talking about, so it would be easier to understand. So price was going like that, right? Sorry. Price was going like that, right? Now it reached here. When it reached here, it made one low, one high, second high, but it already took this, right? Price took this previous low. So now I'm aiming here. There was a fair value gap here. Price in reversal pattern should go back in here, and then that's our trade, right? That's a great trade, a great reversal pattern. Sometimes price does another stop hunt here, but that was the pattern. So if you can look at it here. Look at it here. this was the previous low that this low taken. This was a high that I marked, and now I'm waiting for price to get inside the 1 minute fair value gap, touch it, and go up. Let's see. I wrote reversal pattern, made an order right on the head of the fair value gap, and that's it. Price taking it, and now I'm looking to see for a drive. I had time frame high time frame confirmation. I had a fair value gap, and I had a reversal pattern. Classic. Let's see what's happening. Look at that impulsive move by price. We're already at 38 ticks. Nice money, right? So where's my aim? This is an obvious place to take. This is also an obvious place to take, but there are higher targets. Let's see. More bullish reactions, right? Fair value gaps are still keeping creating. So I've put my stop loss here. I'm already at 49 ticks. Nice money. And my initial first thought about this trade was here. I was thinking about that high because there's a high time frame 1 hour high to take, but you will see that at the end I've lowered my expectations, and that is because New York session is about to begin. It's supposed to begin in the next hour, so I was supposed to lower my expectations and just take the money because it was very nice money. And by the way, this is a trade of three accounts at once. So you see one contract here, but there are also two other contracts that were open in different accounts, and they are all connected, and together they are a lot of money together. This trade gave, I think, more than $1,000. I will calculate and put it in the titles when I edit this video. So let's see what price is doing. Touch the fair value gap here, right? And then runs up, took first liquidity, and then I marked my obvious liquidity. Look, 74 ticks. That's very, very nice for 3 contracts. That's a lot of money here, and there was another target here. So this is the obvious sell side liquidity, and I was very careful around this area. And why? Because price knows that we aim for the higher liquidity. He knows it. The market maker knows it. The algorithm knows it. Whoever you want to call it runs the show, but they know it. So usually what they do, they will give us a smaller take profit and then reverse on us. So I'm very, very careful at these areas, and I don't get greedy. I don't say, all right, let's go up. No. I have targets up, but the timing is very, very important. So I have this one in mind, and I have this one in mind. I'm looking very careful about what's happening. So it didn't really took it. It may just equal highs. And now I'm at 50 seconds chart. I'm looking at the trade. And now, as you can see, I have this fair value gap, this whole gap, as something that I prefer price to not go lower, because if price is going to go lower, I'm going to close. And a lot of the time people ask me, how can I trade for 300 ticks, 250 ticks? And this is because I look at price and I set objects at which I don't expect them to go lower if I'm buying, or higher if I'm selling, because if they take them, for me it's a invalidation of the trend, and I'm closing the trade, and I want to take the money and not just lose it all. And it's something that happens to everyone. So let's see what's happening. I'm marking the head of the breaker here and the fair value gap. If price closes below this, I don't want this trade. I want to go. I'll go and close it. Let's see what's happening. First of all, price took the sell side liquidity that I aimed for here, but there's another one higher, right? Let's see. Now it took both. I immediately closed the trade. Very nice trade, very profitable trade. It was, look, something like 90 ticks with 3 accounts. That's a lot of money. It's like almost 200 ticks with one contract. So you get the idea, and this is how you become profitable. It was a half an hour trade, as you can see here. It was 31 minutes, but I'm doing this in a fast forward mode, so we see it all faster. Anyway, I hope you learned, and I hope we all get more consistent with our winnings. Bye.